Let's talk about 4 stocks that I'm bullish on and my reasons why. The first one is a stock that I've covered fairly recently on this channel, and it's a company that is getting a lot of attraction recently. I have seen this company, this name, this brand literally everywhere on social media recently, and that is of course Celsius. But basically what we've been seeing happen is this big surge in customer attraction, this big surge in demand for Celsius drinks. And on social media especially, I am literally seeing these drinks appear everywhere. And you can probably relate to that as well. And this has of course then reflected itself in the stock price. At time of filming this video, Celsius stock is up 94% over the last 1 year, which is really good and pretty crazy when you start comparing it to the indices. However, if we compare that to maybe an NVDA or a Palantir, it doesn't look all that good, but 94% in a 1 year period is absolutely fantastic. Now, the really bullish thing that I'm seeing here is that people are sharing what is happening with the Celsius drinks in their local stores. And these are people sharing on social media from all around the world. People are showing how they are just getting, the Celsius drinks are getting the premium shelf space in all different types of stores, from your Walmarts to your big convenience stores, to your local petrol stations, or your gas stations, I should say. Wherever it is, they seem to be located in prime place. And people are saying that they are going to their local shop and these drinks are completely sold out. They are having to visit a number of times before they're actually able to purchase one and get their hands on one. And this kind of feels similar to what we've been seeing recently with the whole prime hype. However, I think there's some longevity in this brand, and actually they have been building momentum for quite a while. It's only very recently, I would say, maybe the last 6 to 10 months, that a lot of people are starting to take notice. But there have been investors that have been holding on to this stock for quite a long time, and they've been very bullish about it. I have heard a number of crazy things. For example, Celsius drinks are being stocked at Costco in Canada, and actually they are being limited. Obviously, Costco has a membership set up, but even the people with that membership are being limited on the number of items of Celsius drinks that they are actually allowed to buy in any one go. And I'm also hearing the stories that actually shops are just bringing them out on their pallets and then leaving them in the middle of the shops, and people are buying them quicker than the staff can actually take them off the pallet and put them onto the shelves. So it is fair to say that the demand is there on social media visibly, but it's also actually there. The customers are literally loving this product. And this does seem to be giving them a little bit of pricing power. And if the demand carries on, I don't really see that changing. Maybe it only increases a little bit more. They increase their margins even more in the future maybe. And in the previous video as well, I was talking about how they got a big partnership, a big deal with Pepsi, and that was fantastic. What that meant, again, watch that video if you have no idea what I'm speaking about. But there has actually been a recent announcement that they've made whereby Celsius signed a global energy drink partnership with none other than Ferrari. So what this means is now Celsius is the official energy drink of the Formula One racing team. I don't like Formula One, I don't watch Formula One, but I can only imagine how much that is going to help in terms of marketing. Now, I kind of hinted at the expansion geographically. So I mentioned, obviously, this is a massive thing in the US. I mentioned Canada, but it's really worth saying that this is expanding into international markets now. I personally have not seen one in a UK store yet, but I think it's coming. There's no way that you get that sort of traction and that sort of positivity and sales in one market and then you don't try and expand. And they are absolutely doing that. They will continue to expand to new markets. And if their success in the US market is anything to go by, then this is a growth story waiting to happen. Now, another thing that I really like about Celsius, apart from just their sales and the hype and all the excitement and the product demand, is actually financially they are positioning themselves in a very strong way. They have a substantial cash pile and minimal debt, which puts them in a very good position. Now, we do have earnings coming up. I believe they are in early March, and I am very excited to see what happens there because I am expecting quite big things. Now, this is not a position that I currently have. However, I am starting to do further research into this, and potentially it could become a small position in my portfolio in due course. And I'm not the only one expecting big things. Many analysts are expecting the revenue growth for Celsius to continue in years to come. Of course, nothing goes up indefinitely, and a company that is in its very early days doesn't really tend to continue to grow revenue at the same rate as it starts maturing. You know, normal S-curve, adoption curve, you've only got to look at things like that. However, they are still, in my opinion, still in their early days, considering they are yet to even expand that much internationally. And right now, their product line is great. You know, obviously people like it, but it's kind of constricted in a way. I'm expecting as time goes on and they start making more money just from their core offerings, they will continue to develop that product line and actually announce further products. Now, this fast growth that we're seeing from them is actually stealing and holding on to market shares away from their competitors. And it's estimated that Celsius's market share in energy drinks in the US market alone actually grew to 10.5% as of Q3, which is up from 4.4% a year ago. So that just shows you the sort of growth that this company's seeing. If you're looking to learn a way that you can find and research stocks in a really simple, non-convoluted way where you have a step-by-step strategic process, someone holding your hand, guiding you through it all, then please consider signing up to my workshop. I will leave the link in the description below. I've also started offering a portfolio reflection service. This is a chance for you to have a second pair of eyes on your portfolio and get any questions answered that you may have. Again, if you want to book this, I'll leave a link in the description below. The next stock on our list today is actually one that I currently do own in my portfolio, but it is at the moment quite a small percentage of my entire portfolio, and I'm really looking to start accumulating. And that is NVDA. But it doesn't actually stop with just NVIDIA, to be honest, because I am also seeing potential in the sector as a whole. The likes of AMD, ARM, SMCI. There are so many different companies that are all kind of working independently but feeding into this larger sector, and I see very, very strong growth for all of them. But the one that I am focusing on in particular, whereby the risk versus reward is best for me in my position, not financial advice, is NVIDIA. Now, they have had a crazy year. Actually, extend that out. They have been doing crazy things for a while, honestly, and it just seems to be getting more and more as time goes on. Every time I look at the stock and I'm thinking, no, there's no way. We've got to have a pullback. It can't keep going up indefinitely. Physics, basic laws, what goes up must come down. No, I'm wrong every time. It just keeps going up. It's absolutely mental. But I don't think this is hype. I don't think this is overvaluation. They really seem to be actually deserving of what is happening in the stock price. And NVIDIA is now the fourth most valuable public company in the world. NVIDIA's market cap has recently passed both Google and Amazon for the first time in history. And I think the statistics are mad. Like, since January the 1st, NVIDIA has added $650 billion to its market cap in just that short space of time. So here's what I'm thinking. Like I said, I do have this position already, but I am looking to get a little bit more serious with adding as many shares as I possibly can as soon as possible. Now, NVIDIA's earnings are coming up shortly. I believe they're on the 21st of February. If the last earnings that NVIDIA had are anything to go by, then I am expecting big things. I'm expecting them to give very, very good numbers, very good guidance, and to beat estimates, both revenue and EPS. Now, that's not to say that if they have a really good earnings, the stock price will just go up following that, because it doesn't always work like that. Sometimes it's completely surprising and a company will have amazing earnings and the stock will absolutely plummet as people take profits or whatever the case may be. However, even if that happens in the short term, I still think this company has a long growth story ahead, which is absolutely mental to say considering what's been happening. And here's the other reason: stock split. With the crazy surge in stock price that NVIDIA have been seeing recently, I don't see why they won't announce a stock split soon, potentially during earnings, potentially at an independent time, but I just think it makes a lot of sense. The stock is now over $700 per share, and if they announced a 4-for-1 stock split, that would get a lot of new investors and a lot of new eyes on the company. Of course, when a company splits its stock, it doesn't change the underlying value, but what it does do is actually make the stock look cheaper to potential investors. One share is suddenly $200 instead of $700, so people are more likely to buy it. It's all about the perceived value. If an investor is looking at a stock and they see it go from 700 to 400 or whatever it may be, they are thinking that they are getting a better deal. So they are more likely to buy it. It becomes more attractive for many more investors. And I think that will flood a lot of retail investors' money into the company. And typically speaking, that is what happens after a stock split is announced. Again, short term, often the stock price will have a little bit of a surge. There are many bullish things to say about NVIDIA, but I don't want to make this video too long. So what I will just say is their data centers are a big deal. Their data center division, their data center segment of their business contributes to their profits, sales, market worth, everything by a lot. This area of business has already seen exponential growth, rising from $3 billion in 2020 to $15 billion in 2023. And the crazy thing is, it's still expanding. NVIDIA's CEO actually said recently, over the course of the next 4 or 5 years, we will have $2 trillion worth of data centers that will be powering software around the world, and all of it's going to be accelerated. Now, a lot of people will say that NVIDIA has had a crazy growth story. They've had a crazy stock price increase already, and now it's kind of verging on being overvalued. But I don't really think that's the case. When you start digging into the growth and valuation and what they're working on, the growth story, the future projections, all of that, my conclusion is actually that NVIDIA right now is not overvalued. I think it's fair to say that what we've been seeing in terms of AI hype has been crazy. Every single person, every single business globally seems to be turning and wanting to integrate artificial intelligence into their business. So we are seeing this AI shift. The demand has already been crazy, and I don't think it's hype at all. I don't think this is going anywhere. It's not slowing down. You've only got to look at the actual data points and you can see that it just seems to be getting more and more intense. And the amount of money that businesses are investing into artificial intelligence tells us that. And you could definitely argue that no company benefits as much from the rise in artificial intelligence than NVIDIA does. UBS analysts are actually expecting the AI market to generate $420 billion in revenue in 2027, which when you compare it to the prior forecast of just $300 billion, is up significantly. And these figures actually translate into a compound annual growth rate of 72% from now until 2027. So then we have to ask ourselves, what kind of growth rate could we expect companies like NVIDIA to actually capture? So turning back to the UBS analyst, they are actually expecting the market for AI chips and GPUs to grow at a growth rate of 60% during that forecasted period. And then we have to think about NVIDIA specifically, and of course they've been doing great things, but they've also got many great things that they are working on coming up in the future. For example, the H200 GPUs are coming very soon. With any investment, there's always risk. And the biggest risk, the only issue that I see right now for NVIDIA specifically, is definitely supply limitations. This to me is the only barrier to further growth. They have been experiencing unprecedented increase in demand. That's a fact. Now we have just got to wait and see if they can continue to meet that demand with their supply. If they can't, and the wait times for their products go absolutely mental, then of course that's when other competitors will start coming in and actually taking a little bit of the market share. Now we're going to turn to a different sector. We need to talk about Robinhood. Robinhood have very recently just announced their Q4 earnings, and the market is liking what it saw. They did a fantastic job. They beat estimates both EPS and revenue. They announced that they were GAAP profitable and their monthly active users were up 600,000 quarter over quarter. The CFO also announced that they added in January alone 60,000 gold subscribers. You don't even have to know what that means to recognize that that is really, really quite incredible, and that represents 300% of their monthly average. Robinhood is one of those companies, I mean, it's a fintech company, so I guess this is kind of a given, but it's one of those companies that moves very, very quickly. If they have a new product, they get that product out to market in very, very fast times. And this doesn't allow the legacy side of this sector to really be able to keep up with them. There's many, many things that we could dig into about Robinhood. And again, I have made other videos focusing more in depth on this company that I will try to remember to link on the screen now. But one thing that's really, really exciting is, like with Celsius, they are expanding internationally. In recent times, they have offered their cryptocurrency platform, which of course we could get into with the upcoming crypto bull run, positioning themselves very, very well. But anyway, they have offered their cryptocurrency platform, expanded it into the UK and European markets. And then we're going to have the release of their investing platform here in the UK and then further beyond the UK shortly following. Not only are they expanding and adding new features, but they are also marketing aggressively. I have seen so many people on my X, and obviously this is dependent on, who's in your circle, who you follow, but so many people actually sharing that they have made the switch from one brokerage, one platform to actually move to Robinhood, because I believe there was quite a lot of incentives to do so. They are marketing and they are basically bringing in a lot of new users. And it doesn't look like 2024 is going to slow down for them at all. During their earnings, they announced many things upcoming. For example, they are going to be adding investment choices like options, futures. They are going to be increasing the Robin Gold value proposition. They're going to be launching a credit card and joint accounts, which again I spoke about in the previous video I made, and continue to expand. So there's lots on the horizon for this company. I think they are positioning themselves very, very well. There are a lot of competitors in the space, which could be a little bit risky, but let me know what you think about them. And last up, we have a company, we have a stock that many investors love. Many investors, in fact, maybe even you watching this. Let me know if you're one of these. So many people have this company in their portfolio. I do too, but I don't have it as an individual holding. I only have this one as part of an S&P ETF that I have, an S&P 500 ETF. Big company, you probably already guessed it by my little intro there, Apple. I don't need to introduce this one. Clearly a massive company, one of the Magnificent Seven, very strong company. Financially, they are amazing. They have so much cash. They don't know what to do with it. They literally have to pay dividends because of the amount of cash that they have. Great leadership team, great margins. They have a really strong economic moat. They have an ecosystem like no other company that I can think of. Customer loyalty, insane. It's all there for this company. So you're probably asking yourselves, why am I actually even talking about this one? Well, it's because something has been announced, something has changed very recently that is now making me personally think that maybe now is a good time where I actually want to start a position in this company. And that is the new product that they've released, the Apple Vision Pro. Now, up until the point where I started seeing videos coming out on YouTube talking about this product, I actually didn't even know that it was released. I didn't even know that it was going to be released. So they sort of kept that down on the down low. But ever since it's come out, I have not stopped seeing it. Obviously, when a company like Apple releases a new product, there is going to be lots of attention. There's going to be lots of eyes on it. But one thing that I'm noticing with this one, unlike Meta's version, which we'll get onto in just a minute, customers are really liking it. The customer reviews and people on social media that are talking about this product, really positive. Like with the AI shift that I was just speaking about, this product release from Apple represents to me quite a big change. And I think the mixed reality space in general will see massive growth in the upcoming years. Morgan Stanley have actually estimated that Apple could generate $4 billion in revenue from this product by 2027. And apparently that's conservative predictions. For me personally, I would absolutely like to try this product. I'd love to have a go and see what it's all about. But right now, I don't think they've quite unlocked it all. I don't think they've unlocked the full potential of this product because, in my opinion, and I might just be sour because I can't afford this product, but I wouldn't want to walk around with massive, heavy, chunky goggles on and live in this dystopia sort of world. It doesn't sit right with me. I don't like this shift that we're seeing, sorry. You know, we're going into this new era of life where not only are we glued on our phones in front of us and no one's really looking up, but now we're going to be looking through these goggles and not even looking at each other in the eyes. Call me old, call me, a granny, whatever. That is just the way I see it. It's a little bit scary to see that the world is moving in this direction, but it's going to happen. It's absolutely going to happen. The technology that is out there now literally feeds into this. So I think there's a long way to go. I think they need to reduce the size, and ultimately it's going to get to a point where, you just stick this little patch on the side of your head and it, you can interact with the world just like you can with Vision Pros now. But I think until it does get smaller and the price can come down due to the adoption going up, not everyone is going to bite. But I think it's fair to say that this product release from Apple could be the next growth story for them. And you might have seen this, but Mark Zuckerberg, I think last night or maybe the night before, the day before, he put up a video basically saying that Meta's Quest, their version of this, Quest Pro, I think it's called, is a much better product than Apple's Vision Pro, which I think is very, very interesting to actually publicly, put that out there. I don't know, it doesn't sit right with me personally. I've never tried either, so I can't comment. If you know more than me about these two products, the Meta Quest and the Vision Pro, let me know in the comments below which is better and why. Don't forget, there will be a link to my workshop in the description below, and thank you so much for watching this video. Until next time, keep analysing, keep investing, and don't forget to hit subscribe.